Hi traders, coming to you one more time for a 2 minute tip drill. Um, Today I want to just talk about the importance of what you can learn from just following one particular pair or commodity or whatever your choice is. I'm making this because I answered a question in the group, and of course, in that explanation, I went into what my journey was like. Now, I'm certainly not suggesting that, everybody needs to take my journey. I'm just sharing what worked for me. And in doing that, as I have said countless times, I followed one pair, and that was GJ. Now, for the illustration, I've got U.S. oil because certainly that's been a commodity that I've been trading recently. So I chose this particular image because basically it was the after I got out. Now, of course, when I post this video, I'm gonna post the moments that I was actually in the trade, and I'll even put the link in the post so you can go back and look at it, and you can look at the comments that I made. However, what I have been suggesting to a lot of people, and I know swing trading is not for everybody, so this really sort of applies primarily to swing traders, but it actually kind of applies even to intraday traders. I mean, it's something that you can certainly apply because I also have said that the market is fractal, and it is, but you'll only see that if you start to just focus in on one pair, and kind of really date it to the point to where you understand how it moves. Because really, when you understand one, then you actually have the understanding to, follow any pair for that matter, once you understand the nature of the beast. Um, So with that said, I've been talking with quite a few of you, um, and basically, this is particularly how I trade. Now, like I say again, it doesn't have to fit your style, but the concept is the same. You know, I try to get in at the low, um, and then I just ride to the high, or vice versa. Now, um, when I got out at a position where I secured that trade, and I got out right before the market created the divergence that I have highlighted right here on your screen. So, being that I was actually able to identify when the market could potentially turn around, I could get ready to actually trade, you know, the market to go in the other direction. This is the key component as to why, um, I've always suggested you don't really have to bounce around the market. Just trade the swing high to swing low, uh, you know, and vice versa. It's low to high, high to low. You could do that off and on as long as the market is trending. Now, of course, when the market is quiet and it's ranging, then of course your strategy changes. But like I say, what you looking at here is what happens in the course of a week. But if you go down to the 15 minute, you see this whole same pattern played out on the 15 minute. And that's the reason why I say what I'm saying now. It applies to whatever your trading personality is. Now, of course, as I've done so many times here lately, I have seen like I have so much more to share. It doesn't quite fit into a 2 minute tip drill, so I'm going on 4 minutes. Um, but again, these are the things that you can learn just by following one pair. You'll get to see, on your RSI or your TDI or whatever you're using. If you use stochastics, now I don't use it, but if it can identify divergence for you, then great. Um, and I think that's really about the end of my rant. It's just something that crossed my mind, and as I like to try to do, and I learn something, or if I'm trying to help somebody, it's best to document it, and at least in that way, you can go back and look at it, multiple times. So, again, just trying to identify, a potential reversal. The first indication is divergence. Once you see the, divergence, then certainly, if you're still in a trade, start planning to get out of it. And then if you want to, ride it the other way back down, then you wait on your criteria that sets it up, in order to do so. So I'll cover that. The extreme right of the screen there, you'll see um, price went and pinned multiple times, even broke out and it came back across the yellow trend line that I have on the screen there, and then it broke below my EMAs. I use a 10 and a 21. I got the EMA cross, and then the market came back, which gave me the safety trade. If I would have taken it, I think I'd went to bed because after I got out, I was like, cool. I was straight. But again, had I wanted to ride it down, I could have caught that safety trade, and then I think that there was some news released that somebody was increasing oil production, and then of course the market fell by 3%. So that would have been a hefty, trade had I got in it. But like I say, it is what it is. The market's fractal. What it does once, it'll do again. I'm going on 7 minutes, so I'm really, really, really about to cut this out. I hope anything that I said at this particular point has been very helpful to you. So with that said, hey, let's go get these pips.